On a single Thursday in March 1980, two of the richest men on the planet went broke. Not slowly, the way fortunes usually die, but in hours, on live television, while the entire American financial system held its breath. They were brothers. Their father had been the richest man in the world, and they fell because they attempted something no one had ever dared at such scale. They tried to buy all the silver on earth. This is the story of the Hunt brothers, the corner that cracked, and the day Wall Street nearly followed them down. The story begins with the father. H.L. Hunt was a Texas poker player who parlayed winnings into oil fields and became, by some counts, the richest man alive. He raised his sons on a simple creed. Money and paper is an opinion. Money and things is a fact. His son Nelson Bunker Hunt took the creed further than anyone. Bunker was a billionaire who flew coach, drove an old Cadillac, and distrusted nearly everything, especially the American dollar. And in the 1970s, the dollar gave him every reason. Inflation was devouring the currency. Oil shocks, gas lines, savings melting year after year. So Bunker and his brother Herbert reached for the oldest refuge in history, precious metal. But gold was, in their eyes, already spoken for. Governments hoarded it, and for decades it had been illegal for Americans to own. Silver was the overlooked sibling, real, industrial, essential, and cheap. They began buying in the early 1970s, quietly, at under $2 an ounce. And they did something that terrified the exchanges. They took delivery. Most traders buy contracts and settle in cash. The Hunts demanded the actual metal, and they flew it by chartered plane to vaults in Switzerland, guarded by armed Texas cowboys. Year after year, the position grew. They brought in wealthy Saudi partners and formed a buying syndicate with almost bottomless pockets. By 1979, the brothers and their partners controlled, by many estimates, roughly 200 million ounces, a third of the entire world's deliverable silver. And then the price began to move. Silver started 1979 around $6 an ounce. By the end of the year, it passed $20. In January 1980, it touched nearly $50 an ounce. The Hunts' hoard was worth billions on paper. On paper, they may briefly have been the richest men on earth all over again. But $50 silver did strange things to the real world. Families sold heirloom tea sets by the pound. Jewelers watched inventory walk out the door to smelters. Thieves stripped silver from homes and churches. X-ray labs guarded their film. The metal in a dime was suddenly worth more than the dime. The exchanges watched the corner tighten around their own throats. The men who ran the silver market faced a horrifying arithmetic. If the Hunts kept taking delivery, there might simply not be enough physical silver to honor the contracts. Default. Chaos. So the exchanges did something extraordinary. In January 1980, they changed the rules of the game in the middle of the game. New position limits. Then, days later, a rule that allowed trading for liquidation only. In plain language, you could sell silver, but you could barely buy it. The only direction left open was down. Bunker Hunt called it what it was, a rigged deck. But it did not matter. The price broke. Silver fell from $50 toward $30, and the Hunts' great fortress revealed its weakness. They had not bought all that silver with cash alone. They had bought enormous amounts of it with borrowed money, using the silver itself as collateral. When the price fell, the lenders called. Through February and March 1980, the margin calls came like waves against a crumbling wall. The brothers wired hundreds of millions. They pledged oil leases, real estate, even the family silver, and by late March there was nothing liquid left to pledge. On March 26th, their broker demanded $135 million by morning. The Hunts did not have it. The next day, March 27, 1980, became known as Silver Thursday. Silver collapsed to under $11 an ounce. The Hunts' positions detonated inside one of Wall Street's biggest brokerage houses, threatening to take the firm down with them, and panic spread across every trading floor in New York. For a few hours, regulators genuinely feared a chain reaction of failing brokers and banks. The fall was so dangerous that the government faced an ugly choice: let the dominoes fall or steady them. In the end, a consortium of banks extended a billion-dollar line of credit to unwind the position in an orderly way, a rescue blessed at the highest levels in Washington. The brothers pledged virtually everything they owned to secure it, including a stable of thoroughbred horses. The unwinding took years, and it stripped them almost bare. The lawsuits came next, then the regulators, then the taxmen. In 1988, Bunker Hunt, son of the richest man in the world, filed for personal bankruptcy. He was banned from American commodity markets for life. Asked in the middle of the collapse how it felt to lose $1 billion, he answered with a Texas shrug. $1 billion, he said, is not what it used to be. Here is the question that lingers. Were the Hunts villains who tried to strangle a market, or victims of a club that rewrote the rules when outsiders started winning? The truth is uncomfortable. They were both. The corner was real. So was the rigging that broke it. Silver would not see $50 again for 31 years. The brothers spent their last decades far from the trading floors, and Bunker died in 2014, remembered less for the oil empire he built than for the metal that ruined him. Somewhere tonight, a trader is borrowing against a position that cannot fall in a market too big to corner. That is exactly what the silver market was, until two brothers from Texas proved otherwise, and it is exactly what every market is, until someone proves otherwise again. Follow where money dies for the fortunes history tried to bury.